Hello, hello. Hope you guys have a great day. Any questions, let me know in the chat. Monitoring arrow being long from weekly open. Break even. I mean partial risk free. Partial risk free. Yeah, we had nice weekly time rotation. The 1 minute chart, 50 time rotation. Instantly push up, partial risk free, break even. So, let's see what happens with new hour. See what happens with the new hour. So, we had some low day at the nice bullish breakout of weekly's retest, so it's really nice. Potential push to the higher side. So it had just failed bearish market structure break on the 15 minutes. Earlier on London's open had really nice opportunity for trend continuation, 1 hour peak formation high trade all the way to the low 8 hour. So it's nice, really good setup for scalp. Even like this high of the fall. So 1 hour peak formation, high of the fall. Golden template, 4 hour, 15 minute time rotation, retest. You know, as far as you can mitigate your risk quickly. As far as you can mitigate your risk quickly. Hi Matters, good morning. I'm on the longs from load 8, and weeklies open retest. So looking what the 1 hour will do. So anticipating to push higher. Anticipating to push higher. Hope you guys had the chance to do some back testing with the new update. Really like the way of the settings of 3 time frames. So basically what I used weekly, daily, 8 hour. For high time frame, use sorry, one more time. Oh, sorry, my bad. That's low time frame. So I have low time frame levels on one of them. That will be 4 hour, hour long 15 minutes. Then my main template is weekly, you know, for weekly, daily, 8 hour. And then you can have high time frames on, and then you can high time frames 12 quarterly and monthly. So this gives nice way to manage the, you know, 3 indicators, the same one, copy paste 3 times, and it's can manageable, and you can bar replace. It's amazing. not just daily, it's a weekly, so you know you instantly have a context between the current week and previous. That's the beauty. And because we rejected from the monthlies open low the day, last week's low, you know, into the monthlies open and into the bullish market structure breakout. So yeah, end of the day, you know, we kind of low the week, which remember the open price nearly at the extremes. So there is potential, you know, to dip into the key levels. I think you know, potential to come, like do something like this. It will see. Like I said, this low was strong because of the weekly retest and came into balance on like the 50 minutes from this extreme. So it was nice. It was nice. Same time, come on, there was like on 1 minute there was a really beautiful high of the day. Yeah, high of the day scalp. This like not just scalp but like entry, absolutely perfect. It was 1 hour. There was 1 hour peak formation high on hourly, which was the trend continuation. That was down bar, so we took out the down bars highs. That's trend continuation, high probability. Can't see here, but on the let's say the balance imbalance storyline what I developed, it's gave really nice easy entry here. Actually, even on this one, this is mitigation of this level. This high is mitigation of daily, and as well 1 hour peak formation, you know, high of the fall, 1 hour peak formation, golden template for 4 hour, you know, 15-minute time rotation drops back. So as well was pretty straightforward. If you can manage, you know, risk 5 pips, it's nice short was there as well. So yeah, alright, like look, really nice reaction. We just had the 1 hour peak formation low, so we just sweep this low, and I look, mitigation. Okay, that's just 15 minutes, maybe not fancy, but still. So actually I could look for re-entry after this candle. Let's see if it's if it's pushes back and then give me first up bar, I might too considering take, you know, push up. Actually, let me see what does it does with the close. This is, you know, definitely like nice push up. So now what's the target? You know, pretty much take this high out. What is this hour job? This hourly candles is our job is now what? Take previous one. This hourly range job is to take previous one. Stage 1, stage 2, stage 3. 1 bar entry. Bang. 1 bar entry. And I would be already partial risk free. Any questions, drop in the chat. So yeah, my entry on the arrow was right this engulfment. My stop loss is 1 pip. Oh jeez, I'm really terrible on this thing. Which is one candle basically. My partial risk free was 1.6. My partial risk free level. Target. Liquidity of I broke down this pair on morning. Question why I don't see the liquidity. It should be down. I think it should be. Let me quickly check. Let me quickly check the chat. Now, one of the key areas I'm looking is the key level cluster right now. So, first let's see high of the day to be taken out. And where we coming from? Weekly low of the week comes from bullish market structure retest. So if market structure flips bullish, what we are targeting? If weekly market structure is supported bullish with low day, range flips bullish. So where's the weekly's market structure goes? To the weekly's liquidity level, right? Where's weekly's liquidity level? Where's the first weekly's liquidity? At the what's called market structures cloud, opposite side. Where's opposite side? All the way up. So entries potential for bullish structure all the way up there till proven otherwise. Simple as that. How about lower liquidities? Yeah, we have this Friday's low before drop. We have this consolidation as well, but original where this can run all the way up. Can go lower, just considering daily flip, so need to take previous days out, right? So obviously that liquidity right there, just simple range rotation, and this is what low date reclimb, take out previous range rate. It's already done. So if that's done and we're going bullish, what's the first target? High of the day, right? That's the first target. Ultimately, low the previous week's low of the week, respecting low, flipping opposite side, taking out previous week. That's where the first daily's liquidity. That's it. No, like not even 8-hour liquidity there. So that was a nice re-entry, like after pin bar confirming hourly time rotation. IR-man is starting to look the same no matter the time frame on one bar entry. Does it have to be certain kind of bar? I'm not sure, Arman, you're in the Automa's group, but regarding it starting to look the same no matter of time frame, exactly. It's the same principle. The same principle range can only go up and only go down, right? The candle can only go up and only can down. So you have a instantly objective expectation, not expectation, you have objective anticipation, right? If you follow sign of strength, sign of weakness, you have determined what is sign of strength, what is sign of weakness, how it's present itself, and the direction for single range slash candle, the same thing, is only in two directions. That's mean it's irrelevant. It's 15 minutes, it's hourly, it's daily, it's monthly, it's fucking yearly. Is the completely same thing. The next stage is like, okay, what the how you want to follow. You can just using high time frame range, you can anticipate your anticipations for stage 1, 2, 3 in direction of your range. But next thing is like you want to follow the market structure, right? Because what creates the market structure? Market structure is created from single ranges, right? From single bars. So if we have a bullish break on weekly's market structure, let me remove this, and we go 50-minute time frame. And if we have a look, this is this breakout. Let me remove the small time frame. So that's just weekly's template. So if we had a bullish break on weekly's market structure, they just pull back possibly for weekly to go bullish, right? Especially weekly want to follow what? The monthly, right? Where is the monthly? Monthly had the bullish market structure break right then. Whenever it was. Like that. So monthly is trending. Monthly is trending. And to support that monthly is trending, monthly's range need to support that, right? Monthly open. Why open price is so important? Because open price determines does your candle will go up or down, right? So monthly supports monthly range, single range supports bullish trend on monthly market structure. So obviously what you want to see on lower time frames you want to see following the same synchronization, right? The same in line in same direction. So weekly's market structure just push back, introduce more liquidity to go higher. Obviously I love to see more, like, because we have many liquidity clusters right there. You can see we have 8-hour daily liquidity levels right there, and on high time frames we have some nice key levels there, previous 50% on quarterly and monthly. So that could be really nice, drop, sweep, reclaim, and aggressive push all the way up. But that's why whenever new range starts, like if you're trading weekly template, daily, monthly, whatever, so so basically this is previous week's range, right? So as soon as it opens, you have a look into your, okay, what liquidity and what key levels I have below and what key levels I have above, and then you know what exactly you're anticipating to see on charts, where you want to be bullish. So you need sign of strength. Bang, we have a 15-minute time rotation on 15-minute engulfment on weekly time rotation. Bang, again test, pushing for high price. So we just follow market structure with the ranges gives you the entry. 1 bar entry, does it have to be certain kind of bar? It's the time rotation. Trader job is to first decide what time frame of choice you're gonna trade, right? So if you want to trade intraday, let's say you're focusing low of the day, high of the day, right? So basically you choose high of the range, low of the range. So what range you're gonna look into? Is it will be daily, daily templates, weekly templates, monthly, 8-hour of, session ones or whatever. But end of the day, if you're trading every day, you're gonna focus what? Low of the day, high of the day, right? So you focus low of the day, high of the day. That's mean you as a trader, job is to do what? Recognize when you have a sign of strength or sign of weakness for dailies, low of the day or high of the day, right? Period. You recognize your sign of strength, sign of weakness, So that's your entry level. So you have a, okay, you want to be bullish for sign of strength, sign of weakness, you want to be bearish, right? So that gives you green light saying, okay, now you look for setups. So now you look for entry trigger. Then you're waiting for time rotation. That's depend, what time frame you use. If you use 50 minutes, that means you want to see at least 1 hour time rotation for your entries, right? If you use, like I use 1 minute, I use 15-minute time rotation, which on this case is 1 bar. Like it's always will be 1 bar. That's why it's called trigger bar. You want to see, for bullish time rotation, you want to see bullish presence, flipping that time frame over from bears to bulls. Look, on this single bar flipped, bearish weekly into bullish weekly, right? Bearish 50-minute into bullish 50-minute. So that's 1 bar, entry bar. This would be again entry bar. Pin below, close above. Pin below, close above. So that gives you heads up. Your, low of the 8 has a evidence with 15 minutes starting flipping bullish, right? The first sign with bullishness at key level, weekly open. So that gives the context. Weekly, retest or pushing higher. So that's 5 days there. I don't see the new tables on my indicator. Is it? Yeah, it should be. It should be Automa, Ultima backtesting, like cycling backtesting thing. So yeah, I updated. You maybe didn't see, and I messaged that I posted, I think Friday or Saturday. I don't remember. Arman, great, thanks. You're welcome. Yeah, this week we will record the videos regards the, showcasing the tools, what we have, like, what options they have and what features and stuff like that. Some small video snippets, like, of the tool specifically and features. Gold also respecting weekly, so looking for time rotation on daily. Let me check. Yeah, I think we broke down gold earlier on. Yeah, that's the from basically what's my expectations on the gold. What is anticipations on which levels, basically. Is market structure and liquidity the same thing? We track the liquidity which is left behind after establishing market structure pivots. Yeah. It's like, you want to follow the market structure, okay, which direction kinda, it does, but same time, whenever it breaks out, it leaves whenever it goes farther, the market structure is gonna leave the old liquidity, right? So, and then you can view both together, market structure, like market structure's weakness or strength. It can confirm you the not just direction, but as well the target, because remember the liquidity is the fuel for the market. So, and what's the market structure's job, as you guys know? That's establishing trend, right? Which is in the table accumulation, manipulation, distribution. Like it's gonna tell you which phase your market structure are, right? So what's the market structure's job? To get out of the accumulation and establish trend. When market structure establishes trend, what's the market structure's job? Go and take out all liquidity, right? So I can quickly go through that in a second. What do you say daily open? Gold also respecting weekly, looking for time rotation on daily. Yeah, weekly is the same as daily. Vincent? On gold, you had a golden template, low day, with 8-hour peak formation. Weekly time rotation with this bar, it's like 15 minutes, like big ass. You know, but definitely have lower setups like that. In this accumulation, definitely have small setups. Right now, I don't see much entries right now. What, what's now 15 plus? So, like, for buys, like at this point where it is, only if it's kind of, you know, goes up, and at this level, at the key level, takes 15-minute hourly peak formation low for possible, yeah. Otherwise, not really. Yeah, but time rotation on daily is the same as the open on Monday, so low of the day setup was already the absolutely a standard golden template, you know. Low of the day with obstacle time frame peak formation into the bullish market structure breakout. Man, you just can't get better one. So yeah, nice one. So you get nice one. And if you go locally on 1 minute, it even gave you mitigation setup like that. Oh man, guys, that imbalance storyline, that will be something. Yeah, man, you get low day mitigation on 1 minute. Right then. What we have, dip into peak formation low, 8-hour peak formation low, the 4-hour peak formation low. Look, 1 bar entry. Where is 1 bar entry? This one and this one. 1 bar entry, 50-minute time rotation, 50-minute time rotation into 8-hour peak formation low, into mitigation of low day. Absolutely beautiful. 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 Love it. Absolutely love it. Absolutely love it. Just give me a second. Let me just check Aaron because I want to see where it's heading. No. We're nearly at the high there. Market structure resembles liquidity. Okay, let's say, okay, it doesn't matter which time frame. What is this? 4 hours. So if we do this, do this. So we should see a 4-hour market structure cloud with 4-hour liquidity. Let's say on 50 minutes. Just to break down quickly, you know, how market structure and liquidity works together. Like, you know, liquidity is created from market structure. So while price is, you know, so let's simply say, as you guys know, market structure like goes in 3 stages, like accumulation, manipulation, and distribution. So constant, like whenever we inside in the cloud, we accumulating. Sign of weakness, you know, sign of weakness, so bearish accumulation. Sign of strength, bullish accumulation. Sign of weakness, bearish accumulation. When we trending out of the cloud, what we in bearish trend, right? So if market that goes, why? Because we had a bullish break and we established a bearish trend, right? So if, let's say this is 4-hour example, 4-hour market structure. So red one is for 4-hour. So if we establish bearish trend on 4-hour market structure, what's the market structure's job? So market structure, accumulates, establishes bearish trend. So what's the trend's job now? To go and take out old liquidity, right? It takes a pause. So we have a bearish trend, and now we have a bullish signatures, which is sign of strength. That's instantly manipulation phase. We're back inside the cloud, accumulation, sign of weakness, bearish accumulation for what? Bearish accumulation for continued trend, for bearish trend. Bearish trend, what's the market structure's job? Take out liquidity. Takes out the liquidity, trending, bang, manipulation. Manipulation, bearish accumulation. What's the job? Take out the structural liquidity, right? Again, bearish accumulation. What's that market structure's job? Take out the liquidity. Bang, done. Again, we fail. We have a sign of strength. That's what? Manipulation. Back in accumulation. Accumulation. What's this market structure job? Bearish accumulation, job to take out liquidity. Drops, respect, instantly bullish accumulation. If bullish accumulation, what's the direction? We want to see up price, like if you have bullish accumulation. So what's the market structure job? Take out the liquidity. Get out to the cloud. Establishing bullish trend, bang. Takes out previous range, weakness, manipulation stage, retest of bullish break, back in bullish trend, 4-hour in bullish trend direction. So if 4-hour established bullish trend, what's the market structure's job? Take out liquidity on 4-hour. So on off, same as the ranges, can go one direction and another. Same for market structure. Establishing market structure's job is to establish trends. Our job is to recognize accumulation when you're in cloud, accumulation or early sign, failing bullish trend. Obviously you want to go with high time frames because it's going to be a high time frame level. So either you have maybe bearish trend on 4 hours, but on daily you have just accumulation inside the cloud, right? So yeah. And we took out high of the day, just like that. So regards the AMD, you can see what we had. The 8-hour had a bearish break, which was a down up there. See, 8-hour market structure established a bearish break, daily established a bearish break. So we might even push into key levels, retest the daily bearish break, right? And go lower. Because daily has at the moment what? Just manipulation, right? In the bearish trend. Where 8 hours is already in accumulation. But weekly high time frame is accumulating retest from bullish break. So this is high key level for daily to fail his bearish break, get back inside in the cloud and go higher, or rejects from here, taking out what? Taking out this liquidity. Because remember guys, I said always you want to link key levels with liquidity. So if we are reaching for this retest on key level, perhaps mitigating something, so do we have a liquidity linked next to it? So here we have perfect, you know, liquidity to be taken into the key level, you know, maybe even from this high of the 8, we might have even some 50-minute or something balance, you know, some mitigation level. So this is nice zone. I think exactly what I marked on this morning's breakdown and this week's anticipation. But your job, like I said, your job as a trader is just, you know, recognize your time frame of choice. Let's say, you know, daily, sign of strength, sign of weakness, at high of the range, low of the range, like if it's daily. So low of day, high of day, you can go step further and look into multi-time frame order flow, which will be low of the day, low of the 8, multi-time frame order flow, right? So that was my anticipation for this, because look, weekly is open, daily is like, okay, let's just say daily and 8 hour, right? Because 8 hour is your obstacle time frame. So that's daily open, that's low of the day, high of the day, and we have 8 hour multi-time frame. So what does it say? It says daily broke up, retested, going high, right? So that's it. So recognize your time frame of choice, high of the range, low of the range, with sign of strength, sign of weakness. Wait for time rotation, which is your trigger entry, trigger bars, and then only thing you need to do is risk management. You mitigate your risk and rinse repeat. I mitigate, you know, we use partial risk free method, which is basically, you know, closing 50% of your partial risk free ratio level, which gives you the quickest it gives you the quickest way to mitigate the risk, aka break even, if you've been taken out. So I can manage, you know, I can remove my risk in 1.6 pips. I have shitloads of break evens, but I don't care, because they are, you know, scratch trades, and you just again wait for trigger entry and execute. So yeah, so don't feel, you know, under heat, whatever. You have invalidation. If it's invalidates, you know, you've been quickly invalidated, so you're just taken out. That's it. You wait for a new entry. At that point, you can't care less it goes up or go down, because you know, you covered your risk. And then you just, as soon partial risk freeze hit, as soon you break even, you look for new entry. You know, you look for new entry, which, you know, I can see on 1 minute could be really nice re-entry, like this bar, entry bar. Obviously, you know, perfectly, like I said, always you want to link some liquidity within there. So this dip down, you know, perfectly will be like something sweep, like, you know, for me, I'd love to see something like, you know, this, like, you know, for extra confluence, something like that. So you have a sweep of this little liquidity. The whole concept is just, you know, about liquidity, about the liquidity. So I think we had like a NAS 100. We broke down earlier this morning as well. I perhaps deleted the markings. Never mind. Yeah, for gold I still have. I shared the links in screenshots in the chat. Any more specific questions, guys? For me, it seems like, you know, just kinda, you know, a repeatable same thing over and over and over again. It just, you know, as Armand mentioned, look at the same, no matter of time frame. Exactly, time frame is absolutely irrelevant. Time frame equals only one thing: strength. you know, higher time frame key level, you know, you can anticipate higher time frame reaction, you know, longer reaction. Higher time frame liquidity sweep, you can anticipate, you know, higher reaction. High time frame low the range, high of the range, you know, you can anticipate, you know, deeper retracements, you know, or deeper, you know, runs. That's it. Otherwise, just, you know, understanding the what's the word, like logics, you know, you everything is about logical reasoning, you know. Why? Because I was mentioning in the group, you know, we can draw any random line on the chart and we will say, you know, at some point it will work as support or, you know, whatever resistance, right? At some point you will have reactions, right? But what logical reasoning you can give to that line, right? So on this tool, every single line has a logical reasoning why it reacts, why the price reacts from that level, and fundamentally it's all about liquidity, you know. So if you can map, okay, where is liquidity cluster, where is liquidity pool, if you can map and recognize where is liquidity pool, you instantly know what to anticipate, right? Then you're just waiting for what? For your trigger bar, right? You're just waiting for your trigger bar. That's it, and then you execute, you know. Low of the day, 8 hour structural liquidity sweep. So 8 hour for daily is what? Time frame, obstacle time frame. So daily can't go lower if 8 hours start to go bullish, right? And then you're just waiting for what? Time rotation. So in this matter, we can just say for 50 minutes, you know, this would be on 50-minute time frame, that will be entry trigger. That will be entry bar, trigger bar. Time rotation, 1 hour time rotation, a 50-minute chart. So if you're a 50-minute chart, obviously you want to see, you know, first time rotation, which is 1 hour. Obviously on 1 minute, you know, you could already anticipate this 8 hour liquidity storyline, and 50-minute even, you know, 50-minute 1 hour time rotation right there. So if we go on 1 minute, we would like to see on this 50-minute / hourly time rotation on 1 minute price action. Maybe you got it something. So that will be our that will be our 8 hour liquidity last sweep storyline. And we have a 1 hour open. So actually you don't have nothing there. Earliest you have, yeah, like this is trigger bar, 50-minute time rotation. Yeah, nothing specific, no more specific than, obviously you can go, you know, maybe 5 minute even lower to look for better ones. Yeah, it's like pin bar is right before, same time like 1 minute. That's not like, that will be 1 minute. Rebalance level. Yeah, but I think you got the picture. Get the picture. And for the same high, whatever, let's say this is 8 hour. No, that's 8 hour here. For this high of the 8, that will be trigger bar, 8 hour time rotation. 50-minute sweep locally. Nice. For high of the day, failed breakout on 50-minute market structure. 4-hour peak formation, failed breakout on 4-hour market structure, and you have what? 50-minute time rotation. Trigger bar right there. So yeah. Any questions, let me in the chat. If anybody follows some pair, I can have a look. So, yeah, might to take something off here. More specifically after this sweep, perhaps. Arrow is not really the mover, but you know, if you have time with the small spread, it's really handy. Now look, it's just 20 something pips from the entry. But if you know, it's really good for scalping because Arrow has absolutely zero spread. If you have time on the chart. Which direction liquidity is more important, man? It's both. Like it's both. It's just, you know, your anticipation for that, you know, for your range. You know, so exactly same thing. Like, so basically, you know, as I said, once you know new range starts. Let's say let's cover the weekly, right? Weekly template. 50 minutes. So, you know, actually this Wednesday we're gonna do workshop regards the back testing. So, you know, anyways, so, you know, Sunday or Monday, whenever you know, forecasting or, you know, preparing for your week. So you have your, you know, previous range there. So what's your, what's, and basically you know, you've checked the, okay, where are you in the market structure? And then you basically, you know, draw, okay, where is the key levels, where is the liquidity below, you know, that's where you open, right? That's your weekly range opens. And you just basically prepare, you know, plan the trade the plan, right? So what's my plan for being bullish? You know, what bullish scenarios I could anticipate this week? You know, ideally I would love to see, you know, peak formation, low weekly, you know, drop, take this liquidity into this, you know, key levels, which is a high time frame, you know, quarterly is 50, monthly is 50, into the, you know, into the, you know, market structure as we dipped it. You know, that would be like Monday's template. What's the Monday's template like? When we sweep Friday's low or previous week's low, by statistics, it's, you know, highest probability of the low. Anyways, so, you know, so basically from that of your range you anticipate, okay, where is the liquidity for upside? You know, sorry, the liquidity for upside, we have what? Daily liquidity up there, daily liquidity is up there, so there is nothing else on the middle. On the low side, like, look, we have daily liquidity, we have, you know, 2 8 hours, a nice liquidity pool, nice cluster, you know, that will be taken out. You know, one of my scenarios is to, you know, either for bearish scenario, so basically for this arrow, when I posted on the weekly watch list, I will upload the video later. For arrow, my anticipation is what? You know, coming up, taking out these lows, these highs, putting high of the week, and perhaps doing this, for bearish scenario 1. Bearish scenario 2 is come into key levels, putting high of the week, taking this Friday's high, you know, going again, taking liquidity. For bearish scenarios. For bullish scenarios, you know, obviously from this point, bullish scenario will be first, you know, take this liquidity, you know, and go and do something like that. Or for bullish scenario, maybe this, you know, for same as for bearish, to do this, and then maybe this for bullish, which I love. This I love to more the best, because we introduce everybody to long side, everybody jumps in, and you just, you know, we cut them off, come down, take everybody out here, take out everybody here, you know, and then back in the range and go higher. In that case, you know, we took everybody out, whoever is longing, whoever is already shorting, take everybody out, gives them basically what you want to do. So basically, which, you know, liquidity, like which liquidity is most likely. It's like if you have a sign of strength, we're going up, you know, always I'm looking most likely where is, you know, more, so basically where people are more in profit, right? We basically, or just ask yourself, which side will bring the most pain? Which side will, like, push up, like this push up, obviously will bring more pain, because look, you know, everybody is sitting in free cash, right? Everybody is sitting in free cash. Which same here, you know, kind of this, you know. I like liquidity clusters, like when you can anticipate like this kind of liquidity to be hit. Like I said, if we just push up and it shows us, you know, sign of weakness at high of the week, high of the day, you know, daily open fails, obviously we know where it's gonna go, right? We know where it's gonna go. So there's no which liquidity is, like, okay, if you think like if there's no, you know, such thing important liquidity, like any liquidity is important as far as it goes in your, you know, your anticipation is bullish, so we know what to target. But if you mean by, you know, which liquidity is important, like graded, as higher time frame as better, because remember that's where more liquidity sits. As older liquidity, as higher more liquidity, right? As older level, what does it all mean, older level? As higher time frame, as more liquidity sits. Like this daily level has more liquidity, you know, than this 8 hour. It's older. Yeah, creeping slowly. US 30. Same probably like US, no? US 100, S&P, pretty much same. No. Nice setup there for London. For continuation, like obviously if you want to go lower, no, sign of weakness, P formation high on 8 hour. What is done, push up, Asia's high, bang, drop. So obviously what scenarios? It's a nice level. Previous 50% and last weekly's, daily's liquidity storyline level which been swept. So we could drop into, mitigate. New 8 hour maybe opens New York and push up. Otherwise, if you just nose dive, where's the first liquidity? That's 8 hour on this weekly previous range high breakout. So look, weekly is in manipulation, that's mean bullish trend pullback. Daily is in bullish breakout, and we know accumulating bearishly. And 8 hour already has a 8 hour established bearish trend, so 8 hour is trending bearishly. Yeah, for at least you need 8 hour sign strength, sign weakness for daily, right? So where you could have a 8 hour sign of strength, sign of weakness, like literally there's no levels, right? So it's either new 8 hour opens, creates peak formation low, or 8 hour reclaim, right? For first anticipation of daily to go bullish. But otherwise it's like, except this key level, it's just can drop taking this liquidity. But ultimately downside, ultimately downside target for me would be like this level right there. Look how much liquidity is there. We have tons of liquidity. Even from this all long accumulation, tons. That will be like deeper correction. For bullish side, what we want to see, level of 50%, right? So that would be really nice to put low of the day at last liquidity sweeps on weekly and daily. Previous range mid on weekly with low day, or sign of strength on at least 8 hours. So yeah, setup for for all this move was already high with day 8 hour peak formation high. I think that becomes already like but it becomes like a bread and butter setup, daily's golden template with obstacle peak formations. You're welcome. Alright, I think I will wrap it up. If you have any last questions, just drop them in chat, but I will wrap it up. Yeah. But yeah, like, there's no reason for us to, if dollar is strong, still can push up. But just follow level to level. As I said, just recognize your time frames, sign of strength, sign of weakness, and wait for trigger bar and manage your risk. Rinse, repeat. Once you master it, it's absolutely feels boring. It feels boring. Your job is just wait for triggers, execute, mitigate, rinse, repeat. Rinse, repeat. Alright guys, thanks for today and see you in the group. Take care. Bye 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 bye.